The dollar index just hit the 96th percentile. And dollar strength at this level puts pressure on emerging markets and commodities. Something is breaking beneath the surface, and the data confirms it. Right now, the S&P 500 is at 7,267, the 90th percentile for the past year. Historically, the S&P at this level has historically marked a regime inflection. Snider says, the eurodollar system is tightening and nobody sees it. The data says Bitcoin rose 2.7% today, moving against the bearish consensus. In the next few minutes, I will show you who the data says is right and what it means for your money this month. The scoreboard just changed. A scoreboard flip means the numbers shifted. Pay attention to what moved and why. The commodity analyst is right and the data keeps proving it. Oil at $89, 173-day streak. Score 1 for the dollar analyst. Dollar milkshake higher. The dollar index agrees at 100.1. 6 days running. Too early to call McElroy right or wrong. The thesis is building but not confirmed. 172-day streak. Hartman is waiting on confirmation. The narrative holds, but the data has not validated it yet. 166-day streak. The volatility expert just moved from right to early. The volatility expert is waiting on confirmation. The narrative holds, but VIX has not validated it yet. Gammon's call is not working. For now, yield curve moving against the bearish thesis, up 5%. 3 days running. Snider just moved from right to wrong. Bad stretch for Snider, for now. Yield curve at 0.42% says the opposite of dollar liquidity crisis. Score today, 2 right, 3 early, 2 wrong. When a speaker moves on the scoreboard, it means the data changed, not the opinion. That distinction matters. Today's big question, is the dollar about to surge or is it topping out? Snider says, the eurodollar system is tightening and nobody sees it. That is the thesis driving the debate today. It sounds right on the podcast and it is a clean narrative. But here's the problem. Bitcoin rose 2.7% today, moving against the bearish consensus. If the data is right and the speaker is wrong, positioning changes fast. Here's what the data says. The dollar index at 100.1, 96th percentile, up 0.2% today. Gold at $4,113, 43rd percentile, up 0.1% today. Bitcoin at about $63,000, 2nd percentile, up 2.7% today. Bottom line, the data is pushing back against Snider. Until the signals confirm, the thesis is early. If the dollar index breaks below 99, the milkshake theory loses its legs. Right now, it is at 100.1. If gold and Bitcoin both rally while the dollar holds, the liquidity thesis is wrong. The dollar index at 100.1 is in the 96th percentile, reversal territory. If it drops below the 75th, the thesis weakens fast. Gold at $4,113. We'll track it daily on the scoreboard. Phase 1 is the good times. But good times do not last forever. Here's how close we are to the edge. We are 75 basis points away from Phase 2, the phase where credit breaks and volatility spikes. There is no acceleration in credit stress yet. But we are watching the pace, not just the level. The trigger, investment grade, spread crossing 150 basis points. Currently at 75 basis points. At this week's pace, that is roughly 75 weeks of runway. That is mid-November. Phase 1 means risk on is working. Equities, commodities, and real estate all benefit from loose conditions. Enjoy it while it lasts. For context, the last time credit stress built like this, credit spreads blew out and high-yield bonds saw drawdowns of 15%. The credit and rates layer has initial jobless claims, CFNAI flashing red. Gammon says the Fed is breaking things and credit spreads will blow out. The data disagrees with that thesis right now. Phase 1 holds with 75 basis points of buffer. Conditions favor risk, but do not get complacent. Wall Street trades the index. We trade the ground. Here's what the zip level data is screaming about today. Breathitt, KY, lenders are saying no at scale. In Breathitt, KY, the HMDA denial rate is 74.8% across 167 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. Stewart, GA, lenders are saying no at scale. In Stewart, GA, the HMDA denial rate is 73.5% across 68 applications. Top reason, credit history. Credit doors closing is the slowest, surest signal of a turn. Jefferson, AL, people moving in can't afford to live here. 22,742 households moved into Jefferson, AL. Their average income, about $67,000. Median home, about $913,000. Unsustainable migration pattern, demand without purchasing power. These are not hand-picked metros. They are the loudest signals in the housing data right now, chosen by the numbers, not the narrative. Today's debate asked, is the dollar about to surge, or is it topping out? Let me show you what happened the last time we were here. Bitcoin at about $63,000 is in the second percentile. That means it is lower than 98 out of 100 days in the past year. In 2022, Bitcoin fell from 69,000 to 16,000 as the Fed tightened and crypto leverage unwound. In 2020, Bitcoin crashed 50% in March, then rallied 1,500% over 18 months. In 2018, Bitcoin dropped 84% from its peak as the speculative cycle ended. Different environments, different catalysts. But every time, the resolution came fast. The pattern is not the level, it is the speed of the move once it starts. Meanwhile, the dollar index at 100.1 is in the 96th percentile. The last time both Bitcoin and the dollar index were at these levels simultaneously, the resolution came within weeks. That is why the scoreboard matters. It tells you which speakers saw it coming and which ones missed it. If history rhymes, Snider should be paying close attention because the clock is ticking on this pattern. Here's what the data says to do right now. Stay alert on VIX. It is surging 5% today. Fast moves demand attention. Avoid Phoenix at 41% payment burden. That is stretched territory. Phase 1 holds. No alarms. But the runway at 75 basis points is shorter than last month. Every signal is live at analyze.builderslens.com. The podcasters give you the thesis. We give you the scoreboard. Subscribe and I will see you tomorrow morning.